What's up, everybody? Dave Bartosiak here, back at it again with another chart of the day. This time I'm talking about Trump Media and Technology Group, ticker DJT. This has been an interesting one, and I like to point out stocks like this just because of the ridiculousness of how much they move. One thing I do want to touch on, this was like a SPAC, right? And then and then wound up changing into this Trump Media and Technology Group. So whenever you see that, you see these wild moves in these charts, kind of, and then they evolve into the company that they are, right? So I don't really want to focus too much on the craziness before. I want to focus on the craziness since. Okay, so let's go ahead and just kind of zoom in here over the course of the last, I don't know, year and a half or so, couple of years. And you see, into 24, huge spike up as, the SPAC officially makes its move. And then pressure throughout the year. But what's happened recently here is this move since September, late September. And I think, around here is when we start to, I guess the market focuses on, what's going to happen in that presidential election. And then they kind of read the tea leaves and say, okay, well, there's a real chance of Trump winning the election again. So oddly enough, this stock has kind of, aligned itself with that and sort of moved up and down, which I think is kind of funny, but nonetheless, it's made for quite an interesting story. Now, what's been so interesting about it? So you all know that I am a big fan of using these moving averages because they help sort of smooth things out for us, right? Rather than just taking it a day at a time, you sort of look at what these trends have been and it gives you sort of an overall picture. Now, one thing to note is that these two moving averages, the 50 and the 200-day, have sort of converged here recently. Here you have one of those quote unquote golden crosses. This is when that 50-day crosses up over that 200-day. So you have that golden cross. But stock hasn't done too much, save for yesterday's big jump up. And the 50 and the 200 are really getting close, almost on top of almost equal. And the stock sort of consolidated, right? Just above this level. It's kind of waiting it out, looking for its next move. Got its next move yesterday on a big volume spike. So if you look here, volume sort of dried up. I mean, it's still a lot, right? Still talking 10 million shares a day plus. And then you get the big jump on Monday of 46 million shares that traded. So that's the sort of thing that can jolt something into a new level. Now, 46 million shares isn't something, totally out of the ordinary for the stock. Rather, it's happened before, and it happened throughout October and November. Stock used to trade a lot more, actually. Here you have a high volume day, 176 million shares going out. So it's been there before, right? But, even on those huge volume days, there was always supply that sort of came in. Even these days on these huge big spikes, there's always somebody coming in and selling it and pounding it down. Now, you didn't see that yesterday. Here, the stock rises and closes near the highs of the day. So that's something you saw in this initial spike up in the stock into those October highs. So the bulls should be happy about that. But what the bulls do want to see, especially when you're on the north side of that 200-day moving average, you want to see a little bit of continuation the next day. So far, early on, we're not seeing that continuation. We're seeing supply enter the market yet again. So you kind of get the feeling that there's just a ton of either shorts or just institutional money, whatever you want to call it, hedge funds coming in that just bring it. They just bring the shares and they just dump this thing. They sell into the spikes and and then slowly cover down after they've made a ton of money. So that's kind of what the risk is that I see here right now. If we're looking for potential levels of support and resistance, our fibs are always great. And would you look at that 61.8% retracement ends up being a floor in November, break through the 50% ceiling. Here goes sellers again at the 38.2, buyers again at the 50. So this is kind of the realm that we're in now, is this 50, 38.2. So I'd be looking to be a little bit patient. Heck, it might even happen today at some point that market comes back to that 38.2, which ironically enough is 38.20 and change, right? So be looking for something like that, a retrace down there. You could put your stops just shy of the 50% with targets up at new highs. That's one way to play it. Or definitely this is the first target, right? Would be that 23.6. This also happens to coincide, that 23.6 coincides with the November 6th high that you saw. So shorter term trade ideas. The longer term idea is that this thing, blasts through after hitting this 61.8 and hits a extension up there, which would get closer to our March 26th levels, way up there, right? So this is the high here, 79.38, much higher target price. Still, I think if this level fails, well, first the 38.2 fails, then the retest there is likely beyond there. You have the 28.08. So some key levels to take a look at there on DJT, and who knows where it goes. I don't know, but it's always fun to see a stock go from $10 to 80, and then come crashing back down to 10, and then now it's up at, then it goes to 54 and change, and now it's in the 40. So it's always a fun story. That's what I like to point out sometimes with these charts of the day, just the fun stuff that's really moving and looks pretty good. So if you want to see more stuff like this, go ahead and follow the author here on Zacks.com. Be sure to subscribe to the YouTube channel and come back and check me out tomorrow, because I've got another chart of the day for you. So for everybody here at Zacks, I'm Dave Bartosiak. I will see you tomorrow. Have a good one.